Sometimes I do not understand how the market works, and this is one of those days. Alibaba reported their quarterly results pre-market, and they beat analyst expectations, yet the stock is trading lower at 3.5% over what I think what caused them to trade lower is something that has been known for a while now. Okay, so we're going to dive into Alibaba's results. First, I'm going to disclose a position in Alibaba. I own 10 shares, which is my largest position in the stock market by far. And I mean, I'm still up 7%, and I'm not selling my shares anytime soon. Okay, but I mean, overall, it looks like cheap stocks can get cheaper, and expensive stocks can even get more expensive. Okay, as we're seeing here, I think Alibaba at 200 and $55 right now is an incredibly cheap stock. I would say it should be trading over $300 at this moment. Okay, but that's just me. Okay, so let's take a look quickly. Here it is. So revenue was 33.9 billion compared to 33.5 billion expected. Adjusted earnings of $3.38 versus $3.17 expected. Monthly active users were 902 million versus 907 million expected. Also, the company's cloud revenue grew 50% year over year, driven by robust growth in revenue from customers in the internet, and retail industries and the public sector. Okay, so let's just go over again their business highlights. So I'm going to go a little bit more into depth if you want to know more about this business, if you're considering buying Alibaba shares. So again, revenue was up 37% year over year to $33.8 billion. Annual active consumers in their China retail marketplace reached 780 million for the 12 months ended December 31st, 2020, an increase of 22 million from the year ago. Mobile active users were again 902 million, which was an increase of 21 million. Income from operations, we already went over that. They look over EBITDA measures, which is earnings before interest, taxes, and depreciation and amortization. Net income attributable to shareholders were 12 billion, and net income was 11.9 billion. Okay, and if we go down here again, they talk about diluted earnings, etc., etc. And let's just go on their core components. Okay, so of course we see consumers. We already saw that their monthly active users and yearly active consumers were up by quite a bit, which is really, really nice. They go on to talk about their product supply, talking about the brands that they have, so attracting a total over 250,000 brands and 5 million merchants, generating 7.74 billion in revenue. I assume that's over the year. Engagement. So they introduced the follow and entertain features on the front page of their Taobao app. I don't know how to pronounce that. So they also have new retail segments. So they're gaining market share in the grocery category using multi-banner and multi-format strategy. Of course, so they're just pretty much following and introducing new things that Amazon is doing. So again, it's an e-commerce giant. Okay. Also, they have their local consumer segment, and also their Kainao network, which is again trying to improve the efficiency across Alibaba and in logistics. Okay. And again, they have Lazada, which is their Southeast Asia e-commerce platform. They achieved higher growth, and of course AliExpress, which is again in their international market. Cloud computing, this is very, very cool. I like how they're getting into this space. So this Alibaba Cloud empowers the digital transformation of enterprises by providing comprehensive tech solutions and services in the cloud for a wide range of industries. In the December quarter, cloud computing revenue grew 50% year over year to $2.4 billion, primarily driven by robust growth in revenue from customers in the internet, of course, et cetera, et cetera. So this is nice. And this was the first time that this cloud computing part of Alibaba was actually profitable. So again, I feel like this is one of these industries, cloud computing, where it's a lot of initial upfront cost, but once it's up and running, the margins just continue to improve. So more revenue goes straight to the bottom line. Okay. So I really, really like this. Okay. They also have a digital media and entertainment sector. And I believe it's called AliBaba Pictures. So continued its solid track record in content investment and distribution. So, for example, they invested in and distributed the top three grossing films during the 3-day New Year holiday in China, which accounted for over 80% of China box office sales during the period, according to Beacon box office data. Okay, Alibaba Pictures' popular original dramas such as Professional Single also contributed to growth. So this is really cool that now that they're an established e-commerce retail platform, they're branching out into other networks. Okay, and again, I've said this before, I'll say it again. China was the only economy to grow quite a bit during the pandemic. Okay, while other countries were locked down, China was actually able to increase their GDP and increase their economy in a pretty big way. Okay, and I'm saying the rise of China's middle class will definitely contribute to Alibaba's success in the future. Okay, and this is also what contributed to their 37% revenue growth year over year for the past quarter. Okay, and again, this is just their cloud computing plus digital media entertainment. That's only one aspect of their growing business. Other aspects are they've partnered with an electric vehicle, an EV manufacturer by the state in China, so that they're again now working on an EV. Okay, which is really really interesting. Okay, one thing I also like is that they have a share repurchase program. So on December 28th, they announced that our board of directors authorized an upsize of our share repurchase program from 6 billion to 10 billion US dollars for a 2-year period through the end of 2022. So during the quarter ended December 31st, we repurchased approximately 540,000 or approximately 4.3 million of our ordinary shares for approximately 118 million US dollars under the repurchase program. Okay, so again, they value their stock as cheap. Okay, so they're repurchasing their shares. They have an excess of cash on hand. So that's also what I like about a company when their own executives think that their shares are cheap. Okay, and I think what really drove this stock price down is news that we already knew. Okay, so this is their anti-monopoly investigation. And by the way, these are incredibly common in the States. Okay, there's an anti-monopolistic probe on Facebook, on Google, right? And it's just, all over the place, okay? But because there's an anti-monopoly investigation on Alibaba based on the Chinese Communist Party or CCP, then everybody takes it seriously. But this is old news, right? So on December 24th, Alibaba Group received a notice of an investigation from the state administration that it had commenced an investigation for anti-monopoly law. The investigation is ongoing and they're complying, blah, blah, blah. Okay, so who knows what is going to be the result of this investigation. Maybe they'll get a slap on the wrist, maybe they'll have to pay fines, but I don't think the CCP is going to try to take down Alibaba. Okay, and of course they also blocked the IPO of Ant Group, which was supposed to be the biggest IPO ever. Okay, at that time. So on November 3rd, Ant Group announced the suspension of its proposed dual listing and IPO on the Shanghai Stock Exchange and Hong Kong Stock Exchange due to recent significant changes in fintech regulatory environment in China. Ant Group is in the process of developing its rectification plan, which will need to go through the relevant regulatory procedures. So therefore, Ant Group's business prospects and IPOs are subject to substantial uncertainties. And again, this is something that's already known. Okay, and I think because of this, again, maybe this took investors back, or they reminded investors that investing in China is risky. So they're like, okay, we're paying a premium and we're going to sell out on this stock. Okay, and I mean now it's still down about like 3%. So what do I recommend? Of course, I recommend buying shares. It's already my largest position, so I'm just going to hold at the moment. I think this thing should be trading easily above $300 based on their earnings. Okay, it's a good sign that their own board of directors is repurchasing shares. Okay, so that's definitely is a good sign to me. They think the stock is cheap. I mean, just based on their e-commerce and everything, to me it is incredibly cheap. It's nice to see that they're branching out into other spaces like cloud computing, motion pictures, and even the EV sector. And also they have their fintech arm, Ant Group and Alipay. So that's something that hopefully, once this blows over, this will restore confidence in Alibaba. But yeah, let me know what you think about their quarterly results. Thank you for listening. Be sure to give it a like and subscribe if you haven't already. Take care, and I'll see you next time. Love you all.